Hello and welcome to our weekly look ahead at the markets. It's been an interesting few days for global central banks. We had the Bank of Japan with that very minor change to its yield curve control policy, saying that 1% upper band was no longer a hard and fast band but a more flexible cap. So the yen was sold on that one. The market had moved to price in a bit more from the Bank of Japan, but it's still remaining very cautious as it tries to exit its ultra accommodative monetary policy. So over the next couple of months, we'll be looking to see whether or not there's any further movement from the BOJ, but they seem pretty slow to act and they may be missing their window. The Fed, meanwhile, it paused interest rates as was expected, but there was quite a dovish slant to Jay Powell's presser. And in the statement, a nod to financial conditions as well as credit conditions, and that seemed to nudge the market into more positive spin, seeing that the front end of the yield curve moved down and stocks rallying quite handsomely off the back of the Fed decision, and that's really indicative of the fact that the market's starting to price out any more hikes by the Fed. And I think whether it's the ECB or the Fed or indeed the Bank of England as well, which was also in action last week, the bar for hiking is getting higher as disinflation persists. Growth outlook certainly doesn't look to be improving much, and monetary policy becomes ever more restrictive as that inflation number comes down. So even though inflation remains too high, we have got restrictive policy, and I think global central banks are not in a rush to do any more at the moment. But we'll get a read on what's coming up in the coming days from the RBA. The Reserve Bank of Australia is in action. It's been leading global central banks in some ways. It's been sort of leading the Fed by a couple of months. So we're looking to see if it does decide to pull the trigger on a further rate hike. The market's always sort of anticipated that there could be one left in the tank for the RBA, much as it had anticipated for the Fed, although that pricing has come off somewhat post that Fed decision. So does the RBA hike this week? Is there maybe one more to come as well? Inflation moved up more than anticipated in the previous quarter. So the RBA is facing too high inflation still, and the IMF was warning that it does need to hike again. So we'll be paying close attention to what the RBA does in terms of its read across for the rest of the central banks around the world. Elsewhere, Chinese inflation data is going to be closely followed. That was flat. CPI was flat last time out, neither up nor down. And then PPI numbers also there. They were strong deflationary trend there, down 2.5% or thereabouts. So looking to see if there's still more deflation in coming through from China, what that might mean for developed world CPI numbers. The Eurozone inflation number came in lower than expected at 2.9% versus 3.1% last week, and we had Stournaris, one of the ECB governing council members, saying that they could be cutting by the middle of next year. So he was pretty quick off the mark to suggest that could be what happens next. And of course, you've got to remember that if markets have decided that there's no more hikes coming, the next step is, well, when are they going to cut? So the market's going to be front running any cuts and trying to guess, second guess when the first cuts are coming from the central bank. So away from the central bank, so we've got a bunch of earnings coming up in Europe and the US. I think highlights for the US will be Disney. It's faced a difficult time of late, but we're looking to see if there's any improvement. Uber as well. And then you have a triumvirate of Cathie Wood ARC stocks, so 3 of her top 10 stocks in the ARC Innovation Fund. I think Twilio, Unity Software and Roblox. So they'll be interesting to see whether or not there's any uplift for ARC and what that might imply for that sort of that much more speculative end of the tech spectrum. That's the one that's been hit hardest by rising rates, of course. So that will be of note. And then we have some big hitters from Europe as well. Adidas among them, as well as AstraZeneca, which has seen some very positive outcomes from cancer drug trials. Is that enough to offset waning COVID vaccine sales? We'll wait and see on that one. So lots to look out for in the coming days. Remember, risk will always be at the mercy of what's going on in the Middle East, but fundamentals like earnings and inflation data and central banks are still really what's underpinning the price action. So that's it for now. Thanks for watching.